Forex.com. In this video I'm going to show you Ed's price action EA, and what you see here is it's called my FX book, and what it does is it hooks up to my demo accounts, and then it shows all the stats on my FX book. And so this is one of my demo accounts that has Ed's price action EA on it, and it has been on it on the demo for almost 2 months now. And what you see here is the EA on multiple currency pairs. This isn't just from one currency pair. If it was one currency pair, it wouldn't have made this many trades, because I'm only trading a few hours a day. And so far, in almost 2 months, it's made a little over $3,000, and that's using an initial lot size of $1 a pip. But I'm using martingale, which increases the lot size, which I'm going to show you in a minute. So let me go to the demo where I have it set up on my VPS here, and it's on these 10 currency pairs you can see on the bottom here. I'll just go across. And so what the EA does, what the strategy that I'm using right now, is I have martingale turned on. So the way it works is if there's a bar that closes bearish, that's at least 5 pips or more that closes bearish, and then if the bar after it, if price goes up and then goes past the previous bearish bar open, which is right here, then it'll trigger a buy order, and below the buy order it'll place some pending orders, which are they're called buy limit, and each one of these is a larger lot size. And so when if the first trade gets take profit right away, it's only aiming for 10 pips, then all these will be canceled. They won't be used, and it'll just take profit and look for a new signal. But if this doesn't make the 10 pips and price goes down, as you can see, it'll start triggering the pending orders, and they have a larger lot size. It's doubled each, or no, I don't think it's doubled. Let me see if I can open it up here. This martingale strategy is totally optional. You don't have to use it, but it seems to be the most profitable when you do use it. So I have used limit orders on true. There's only 4 limit orders. They're 10 pips apart, and since I have lot multiply at 2, that means it's going to be doubled. But you don't have to do double. You can do something like 1.5, so if you don't want to risk double in the lot each time. But this is why you want your first lot size to be real small, because if you're using $10 a pip, you can end up with a huge drawdown. You can wipe out your account easily if you have a small account, like only $5,000 or $3,000. It would get wiped out really quick if you tried to use $10 a pip with this strategy turned on. Because what it would do, it would multiply the lot size. The first lot would be $10. The first pending order would be $20, the next would be $40, the next would be $80. So that's real dangerous if you have, unless you have like $100,000 or $1 million, you don't want to risk that. So so that's what's happening here. And when it goes down, it triggered this one, it triggered this one, and then it still didn't hit 10 pips, and it triggered this, and it finally went up, it hit 10 pips, and they all closed at the same time. But this had a larger lot size. This right here, I believe, was this alone was $80 this win, because it was up to $8 a pip when it hit this, and so when it only went 10 pips, got $80, and so you have an overall profit even though these two were losses. And that's how this EA places trades when they're signals. So that's just one currency pair, and it's doing that on all the currency pairs, that I have the EA set up on. But what I'm doing is it's only trading this small interval right here, roughly between, like, this is the beginning of the Asian session, Australian session. It's the first like 6 hours or so of that session. Now if you want the EA to trade all day, you have a higher chance of getting a drawdown. And what would happen in the case of a drawdown. For example, if it didn't go up here 10 pips and price suddenly started having a huge drop like this, so that all these orders were set off and then hit your stop loss on the other side, then you would have a huge loss. And that's how that can happen if you try to trade all day long. So I just try to trade during really slow hours, get some pips in, and then it won't trade again until the next day. So just during that small interval on the 10 currency pairs, it's aiming for some trades. And only once did it hit the stop loss and went down and hit the 30 pip stop loss. And actually, this at the beginning I was trying different settings, and they were a little more risky, so I changed it. And since I changed the settings, it's been real gradual increase since then. And but it's only been 2 months so far. So this is where the stop loss is, by the way. In the inputs, the take profit is 10, the stop loss is 30. So the stop loss is placed 30 pips below the last order, which is right here. And but that's because of the way I have it set up. You can turn off a certain switch inside the EA, and then each one of these will use a 30 pip stop loss instead of just placing one stop loss. And all that, I have another detailed video about this EA that you can watch that'll show you, explains all these inputs. Right here where it says use limit order stop loss true, that means it'll use the stop loss, only one stop loss below the last order. If this was on false, then it would use a stop loss for each order. So let me go here. And this is the strategy tester. I'm just going to let it run. Oh, and there are settings. If you have it on 10 currency pairs, and you have this input on true, and you have this on 4, then it won't open any more than 4 orders. That way you can prevent it if you don't want it to open 10 orders. But if you're using the martingale strategy, which turns on the pending orders, then this would count as 4 sets of orders, which would mean 4 initial live orders, but each of those orders also could have 3 or 4 pending orders, so that would end up being a lot of orders, even if it's just 4. You know, they might not all get triggered. If it hits the 10 pips on the first order, then all the pending orders are canceled. So this you can use to limit it. And sometimes if the orders are triggered at the exact same second, it can go beyond this by at least 1 order. So maybe say you just want 4, maybe you could put something like 3 just in case it gets an extra one in there. It doesn't happen too often, but it could happen. So I'm going to go down here. This is the Euro US dollar. Just going to test 3 months or so. M15 chart. I'm just going to show you what it looks like. It doesn't seem like it makes a lot of trades. That's only because I'm using real safe settings, so that it only trades a few times, 1 time a day. But if you have 10 currency pairs, you get more than 1 trade a day. But you can actually experiment and just turn off the time setting so that it trades 24 hours a day, and you'll see all these. It'll fill up with this. Sometimes you can make thousands of dollars, but then you get the one huge major drawdown, or you get like 3 or 4 of them in there, and then it wipes out all the profits. That's the dangers if you trade all day. And not only that, you can actually change all these limit orders. Like, they don't have to be 10 pips apart. You can make them 50 pips apart, so that you have a better chance of, if you put them 50 pips apart, then you want to aim for something higher than 10 pips, because you can end up triggering most of your pending orders, and finally it goes up a little 10 pips and they all close at that spot, but you'll end up with an overall loss because each order was 50 pips apart. So if you have 50 pips apart, you want to probably aim for at least 50 pip profit, or even 100 pip profit. So in there, I'm going to let this run. So let me open This right here is my VPS, by the way. And there's also different entry points. You can enter trades at different times. So you can tell the EA. Now, if all the entry points, like if this is on false, right now with this on true, it's basically aiming for a bearish bar or bullish bar to be 5 pips or more, and then it's waiting for the next bar. If it's a bearish bar, then it's waiting for the next bar for price to move above the previous bearish bar open, and if it's a bullish bar, it's waiting for price to move below the previous bullish bar open before triggering a trade. But if this is on false and this is on false and all these strategies are on false, the EA by default will just start trading every single bar. After every bullish bar, it'll place a set of buy limit orders, and after every bearish bar, it'll place buy limit orders below that bar, and after bullish bars, it'll place sell limit orders above the bullish bar. But I explain all this in another video, and also in the manual that comes with your purchase, so I'm not going to explain it all here. So limit orders, you can actually do hedge limit orders too. If this is untrue, it'll place buy limits above and sell limits, or buy limits below and sell limits above each time there's a signal. Close everything. If you have that untrue, you're telling the EA to close everything. Like if you have a bunch of trades at once and you get a 10 pip profit, it'll close everything if you have that untrue. If we're using limit order expiration, this will if a limit order isn't triggered by a certain time, like say you only want it to be up there for an hour, put 60, and then it'll delete it after 60 minutes if it's not triggered by that time. The only drawback is if price goes down to there and would have hit it and gone up into profit, then you could have had your profit. But if it's not there anymore, you won't get profit from it. But the advantage is if you get one of those times when there's a strong move in price that would have set off all your limit orders and brought you into a loss, they won't be there anymore, so they won't get triggered, and then it will have saved you. So it has advantages and disadvantages. So this is finished. So let's look at the graph. There weren't any losses during that 3 months for the Euro US dollar. And here, as you see, but it trade real minimal. It was only one pair, and it only made $1,000. And this is the lot sizes that were used. It was risky, $5,000 account, and the first lot was $3 a pip. Then the next is 60, 120, 240, 480. So it didn't hit any stop losses this time, but if it did, that would have been all these, just multiply all these by it would like 480 times, this is $40 a pip, and if it went below that and hit the 30 pip stop loss, that would have been a huge, and plus it would have been, all these would have been like more than minus 30, because 30 pips is farther away from that. So could have ended up with over minus $1,000 just from hitting the stop loss once. But that didn't happen, and it doesn't happen that often. And that's what's nice about using multiple currency pairs and only trading for a few hours, getting some pips, and then not trading again. It gradually builds up your account balance over time, rather than trying to get like rich overnight. That's when you might get a couple $1,000s, but then you might lose a couple $1,000s in the next couple days if you try to trade all day. Anyway, that's all I wanted to show you. At the time of this video, I'm actually offering a free demo version, so you can try the EA out for a month. No charge, and you just sign up for the link, and you can get the EA and install it on your computer. But it'll only work on a demo account. If you want to use real money, you have to buy the EA. And if you buy the EA, you still have a 60-day money-back guarantee if you're not satisfied with it. So, once again, at the time of this video, there is a demo. I'm not sure how long I'll be offering the demo. I'm gonna see how it goes. And okay, thank you very much for your time.